Once again, US stock indices are trading near their record levels. This can be attributed only to upbeat corporate earnings reports. At the same time, fundamental data favors the US dollar as traders are awaiting the meeting of the Federal Open Market Committee. Thus, the US dollar index, measuring the value of the dollar against a basket of 6 world currencies, made a rebound and ended the last trading week near the annual high of 94.60. Market participants anticipate that the current inflation rise will force central banks to act more quickly and decisively to reduce government incentives. On Friday, traders found out that headline price pressures, as gauged by the Personal Consumption Expenditures Price Index, including food and energy, increased 0.3% for the month, pushing the year-over-year gain to 4.4%, the highest level since January 1991. Meanwhile, the euro tumbled after logging its biggest single-day gain in 5 months. By the end of the week, the euro-dollar pair lost 0.69%. The reason for such dynamics is the market's reaction not only to the stronger US dollar, but also to the news that inflation accelerated to a fresh 13-year high. At the same time, the ECB decided to leave monetary policy unchanged and maintained its forecast for interest rates. This means that the regulator is still sticking to its view about the temporary nature of price pressures. The matter of inflationary pressures is also relevant to the British economy. In addition, investors are worried about the ongoing energy crisis. However, market participants will still expect the Bank of England to tighten its monetary policy in the near future. That is why the loss of the pound sterling is less than that of the euro. Speaking of the cryptocurrency market, traders have so far refrained from opening further long positions on Bitcoin. The previous week was a better one for Ethereum. The digital currency hit a new all-time high. As for the first cryptocurrency, BTC is consolidating and gaining strength near the $61,000 mark, preparing for the next rally. During the last trading week, Brent crude oil was trading near a 3-year high, but ended the 5-day period with a 1.79% loss at the level of $84 per barrel. Oil traders hope that at their next meeting to be held this week, OPEC and its allies will announce that it will continue to implement a gradual output increase of 400,000 barrels per day on a monthly basis. However, there is still a risk of lower crude production due to the likelihood of Iranian oil returning to markets after Tehran agreed to resume talks with the EU with a view to reviving the 2015 nuclear deal. Gold prices also closed the previous trading week with losses. The precious metal pulled back from a 6-week high and slid to $1,783 per troy ounce. This downtrend can be attributed to the stronger US dollar and higher US Treasury yields. Thus, market sentiment for gold is bearish. Meanwhile, traders are awaiting the outcome of the Federal Open Market Committee meeting. You've watched a combined financial review of commodity and currency markets with me, Anna Kasatkina. Stay tuned.